You are looking live at the Nasdaq daily chart, and I'm just going to go over this briefly because I do this every day and everybody's heard it over and over and over. But we did have this peak to trough July 19th to October 26th, 12% garden variety correction. So, in this case, we want to step on the gas here. We want to lighten up here. And now we're stepping back on the gas again. Why is that? Well, because the Nasdaq traded below its 200 here, and then it started a rally. Then on day 4, it had a follow-through day, and then a subsequent follow-through day on November 2nd. So November 1st and 2nd were essentially follow-through days. And then on November 3rd, which was a Friday there, it had another nice strong day. And the subsequent action from that follow-through day has been really, really strong. Tuesday of last week, it was up 2.37%. You can see the last 3 sessions, it has been up 007, 007, and then 008. So it's just trading kind of flat there after a real strong move. This is a weekly review, and we're going to take a look at the weekly chart of the Nasdaq. And many have pointed out, this, cup with handle pattern. And now that the correction seemingly is over, we've had really what we call 3 hammer candles, which bodes well for future market action, for the bulls, for the long side. And I would just say that 14,446 remains an area of interest. We'd like to see it blast through here real soon and make a new high. So anyway, we'll look at the monthly chart. What the heck? You can see these, bear markets, they don't happen all that often. We had a little tiny one here, and then the taper tantrum, and then the COVID, and then the Fed-induced bear market with the rising of interest rates, and the QT bear market. But it's had a nice response since. And there you can see that cup with handle pattern with the 3 months down, and now this hammer candle in November. Anyway, that all looks good. What doesn't look good is our Russell 2000 index, and it's having a little trouble getting going here. I've mentioned several times the inverted, head and shoulders here, and it did move up, but then got rejected here like Matambo at the 200. And then it's, we want to see this. We want to see this rally broaden out. I want to see the small caps participate, and they just really haven't so far. The yields, if I can get the ticker symbol right, we can see that the yields have come down below 4.5%. This is the 10-year Treasury yield, and I think it peaked maybe about right here, and then now it's down below 4.5%. So that should be good for growth stocks and those stocks trading in the Russell 2000. Anyway, we'll keep monitoring it. We know what is working, and that is the Mag 7. It's a safe haven trade. Large liquid leaders, people are piling in here, obviously, but we want to see the trade branch out to the smaller cap stocks. I have this one on my watch list, standard buy point there at the 198. I guess if you get in there though at the 189 here where it is right now, if it just trade a little sideways, I like this action right here, 189.98. So Apple looks good. Microsoft, we've been in this one for a while at MC Stock Charts. We had this one at 340. Then it ran up, and there was Sam Altman, was let go, I guess, or resigned, whatever. It doesn't matter. And then there was a big, financial media news made a big deal about it. But I don't think the loss of one person is going to affect, a large company like this. I would like to see a bigger pullback here. So maybe Monday we come in and it'll pull back and shake some folks out. But Microsoft looks really good to me, this nice symmetrical cup shape pattern. And I talked about, on our site, like if you're a trader, a swing trader, and you just took this thing from 340 to 370 and took your money, that's fine. If you want to hold it for longer term gains, that's fine. And if you trimmed half and want to let the half run, that's fine too. It's all about your time frames, your goals and objectives in the stock market. But if you have it here and you let it run up, you can set your stop below the low of this above the low of this day here, and just protect your gains. And if you sold it and want to move on to a different trade, that's fine too. But definitely, if you sold half, raise your stops, ensure yourselves a winning trade. Another stock that a lot of us got into is Meta at the 312 level here. Let me get my line pin. Yeah, 312. That was an area of interest, and then it ran up, and now it's pulled back last week a little bit to its 10. In the last couple sessions, it got back above the 335 level. So Meta still looks good to me. If you look at the weekly, this is a weekly review, so you got to look at the weekly charts. You can see this period of consolidation after this long run. A nice brief, consolidation period. Now maybe a pause that refreshes before it moves higher. I like the looks of Meta. I also like the looks of Amazon here. You can see another, large run up, consolidation period. It traded down to its 200 and then ripped through its 50 and moved higher. There you can see this a little better here, down to the 200, ripped through the 50 on earnings, and went sideways for a little bit, pulled back to the 10, found support. And that's what you want to see on pullbacks. That's why I like pullbacks. You find out where your stocks are being supported. That's valuable information, I think. Google's another one that looks good. Once again, if this artificial intelligence theme is going to be, thrusting the new uptrend, the focal point, these stocks are going to do well. And so we're just going to have to wait and see. But this one took a long time after trading down, nearly to its 200. It did finally get above the 50 and traded sideways. Looks okay. Not my favorite, and this is my least favorite, even though it's got this double bottom pattern. It hit resistance here at the downtrending 50, so it's still got some work to do before I get interested in that one. And since I mentioned the AI theme and NVDA, this one has to deliver if this theme is going to hold true and have a long-term uptrend. NVIDIA, they report earnings on Tuesday. It's a holiday shortened week, and there's probably going to be lighter volume. So could be volatility with this one. I believe the options market price is in a 9% implied volatility, which means this one could move to roughly, 540 or down to, 450 or so. So we're just going to have to wait and see what they say. You can see, this is a 1.2 trillion market cap with triple-digit earnings and sales growth. So pretty darn impressive. And since I'm on the semiconductors here, I'm going to go to AMD. This is one that I pointed out and completely whiffed on. It broke above its downtrend line on this day and now has moved higher. It looks really good here, consolidating in a base. We got to take a look at the weekly. Yeah, that base is shaping up pretty sharply there. I like that. And of course, strong leadership from the great Lisa Su. And I don't know, they report strong earnings and growth over time. The price should appreciate. So we're just going to have to wait and see. They are involved with the artificial intelligence movement as well. Broadcom, I got to look at the weekly here because this has a nice consolidation. You can see this big cup with handle, big move higher, consolidated for a long time. Now it's starting to push away from this base. It was up 2% last week. Nice week for Broadcom. And it's above its moving averages. Like a lot of stocks, it's a little stretched right now. Not too bad, but they're starting to get a little extended. And Intel, shocker. Intel, geez, look at this breakout. This is just one of the old, stodgy semiconductor companies. AMD has certainly been eating their lunch over the years, but you could see that's a nice 12% move for Intel. So congrats to the longs there. That's a nice breakout. And we're going to monitor that one, even though it's one of these kind of slower moving stocks. But yeah, Intel looks good there. It's climbing, made a bottom. Looks good. I'm going to move on to something that I really like to monitor, and that's retail stocks. Retail, if you listen to the financial media, the consumer's dead, we're going to recession, and stocks bottom when things look their worst, and then they start moving higher, just like they top when things look their best. And I'm seeing a lot of retail stocks looking really good right now. This is an American Eagle Outfitter. You can see the big sell-off stage one, base, and then now it's moving higher. It's actually making new highs, a nice 5% move last week. Yeah, I kind of like this one. They're reporting earnings on Tuesday. Probably get lost in the shuffle with the NVIDIA earnings, but I'm going to still pay attention to that one. Another one is Abercrombie and Fitch. I mean, look at this thing. When they report earnings this Tuesday as well, and one of the things that I'd be very careful of is this thing has had a nice run, and if I go to the daily, you could see a gap here. It keeps gapping higher, right? Gap, 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 and it's like playing Russian roulette. There's a one in the chamber, 6 chambers. One of these times you're going to get get it in the temple. So I would be very careful here, not really expect another gap higher. Sure, it might deliver, 20% sales growth, triple digit earnings growth and gap higher, but it's done it a lot, many times. So I think it's a little long in the tooth there. I'd be very careful with Abercrombie and Fitch. I'm going to put Uber in the retail because it's consumer, consumers, consumers got to spend money, to get around, and Uber's a leisure services stock, but it had news, I believe, with Lyft on November 2nd, the best day of the year. And this is just when the index bottomed, right? So this is powering higher as the index is moving higher. And then it had earnings on this date right here. So it really blasted higher. So that's why I pay attention with stocks that are up on volume. Even within a base, I wouldn't be buying, 2 days ahead of earnings, but it had strong earnings. And now this is what I'm talking about, stocks getting a little extended, from their bases. And so you got to be careful. That's why, we embrace a pullback. If the markets want to pull back, that's fine. You want to look at stocks that are leading like Uber. This has been on our ready list, and I'm going to have to take it off. That one's moved quite nicely. Lululemon, another one that we had, retail stock that it just blasted higher, pulled back Thursday. I forget the news. I don't know, maybe something to do with oil, I forget. Anyway, it came back to the 10, doesn't matter, had a nice inside day on Friday. Lululemon looks really good. I'm also going to include DraftKings in our because the consumer has to spend when they gamble, right? Leisure gaming stock, but you can see the consolidation, the moving higher, and this one again is getting extended. It's been on our ready list. I'm gonna have to take it off. It's you can see the consolidation and this big move here in the last 3 weeks, just moving higher. So DraftKings looks good. That's why we pay attention to stocks up on volume. Look at that move. I pointed that out. I think the earnings gap with the and I'm not going to do that today. I'm going to get into IPOs a little later on. 16% move with 300% above average daily volume, just continued higher. So that one looks good. Another one that, I don't know, ELF, a lot of people said, it did break its upper channel line, but it just got it back into a, just got back into a base, right? And that's what I'm seeing. Broke its 200, now ripped back above its 50. I think this looks good. 112, 47. Yeah, nothing wrong with the ELF. Once again, stock's not going to go up because of the chart. You got to have the strong sales and earnings growth, and they've certainly been delivering that. So I'm not going to give up on the little ELF. Wingstop is one that I've got to look at the weekly. It's a weekly review. You can see this is a nice consolidation here. Beautiful cup pattern. The last 3 weeks have pushed higher. It was up 9% last week. And like I said, some of these stocks are getting a little extended. So yeah, just if it pulls back a little bit, it'll provide you an opportunity. That's why I don't mind having a pullback here with all these stocks being a little extended. ROST Stores, another one, they reported earnings and had a nice move here. So, don't give up on the retail. They're showing well. ON Holdings, ON is, they reported earnings, not much of a reaction. It's trading below its 200. I want to talk about this because I'm going to feature this and I think 10 or 12 other IPO stocks on an educational video on mcstockcharts.com. But it's still, to me, it's in its institutional due diligence phase and has not reached its advanced stage yet. Up 2% last week, not bad. Definitely a stock of interest, but I think it just needs more time. It's going to have to deliver more earnings. And here you can see it's got pretty solid sales and earnings growth. Anyway, that's enough for the retail. I might have overdone it there. And I didn't even mention Crocs. Anyway, ServiceNow, this is on our ready list, and once again, broke out and it's extended here. So I'm gonna have to take it off. And congrats to the longs. You have options now. You can trim, you could take the trade and sell it all and move on to another one. You can ride it, to bigger gains. This is definitely a leader in that space. Another one that was on our list is BRZE, BRZE, and this is consolidating in a base still. I would still put this on a ready list or actionable list. I would especially like it if it pulled back to that 10 there, but you can't always get what you want. You get what you need. And this is DDOG, another one that was been on our list. And you got to look at the weekly on DDOG. This is really setting up nicely. I believe the old top of this base here was about 120. Yeah. So it's got this beautiful cup shaped pattern, nice pullback, and now it's ripping higher after its earnings report. Another 5.68% move last week. So DDOG looks good to me. VRNS, another one that I missed on, but you can see this consolidation to move higher. Another extended software stock here. There you can see it on the weekly, nice consolidation, this little flag pattern for weeks and weeks, and now it's pushing away from its base. You can see the big volume there. That one looks good as well. And I got to go to Palantir. This is a big beast. A lot of shares, 44 billion market cap. But you can see this is a daily chart now, the consolidation pattern moved up on earnings, 20% move. We always want to pay attention to that, and is now, completing the right side of this base. I would like to see a little bit of a pullback, but like I say, you don't always get what you want. And it's a nice little cup shaped pattern. So I like Palantir. So if you're looking for stocks to buy that aren't extended, they're out there. I'm going to show some more here. Certainly not in the cybersecurity space. Palo Alto Networks reported a good quarter. I don't care what the financial media says about billings. They want to spin it one way. I just think it was like a sell the news event, strong earnings, and they sold it. This company has the cash flow, the return on equity. This has got a pristine balance sheet, stock buyback program. Yeah, it's really expensive, no doubt about it. Much growth is anticipated, but 66% earnings growth, it's a strong company, but I don't believe the stock is as strong as CrowdStrike, which is once again extended from that 160 area. It made a nice move. I believe this is one that of the IPOs, you can see that, I'm going to go through the IPOs once again on our site, but you can see it had this pullback during the Fed-induced bear market, and now it's been leading while the Nasdaq was floundering the last 3 months here. This thing was just trending higher. I believe this could be one of your home run stocks for 2024. The way it's acting, very strong, and showing leadership in the cybersecurity space. And same with the Zscaler. I don't think one without the other. They're very similar. You can see it was showing strength while the Nasdaq was pulling back. Yeah, Zscaler very strong as well. Anyway, I'm going to get out of that. I'm going to do the drugs for a little bit before I conclude. Eli Lilly, this one's setting up in a base. I mean, if you're looking for actionable stocks, I mean, this thing has not been participating in the November rally with the Nasdaq, but Eli Lilly looks good. It's a weekly review, so you got to look at the weekly chart, and there you can see this thing is a monster stock, and it's just consolidating in that flat base pattern. It's not going to stay there forever. Its running mate is Novo Nordisk with these weight loss, obesity, now cardiovascular and kidney drugs. I believe they're going to be some of the biggest selling drugs in the history of drugs. Yeah, I know Lipitor sold a lot, and the birth control pill, Syntex, but these weight loss, obesity, cardiovascular drugs are going to be massive. TGTX is another one. Now the drug stocks have been hammered this year. It's very hard to find a winner. I had this one on our ready list here last week, I believe, week before at 1140. It just kind of flattened out. This is a spec stock, you have to have patience with it. They're going to have to report, a couple more solid quarters, but there's this gap to fill here at 1956, and I like its chances. I think the risk reward is pretty good there. And I did mention the drug stocks, XBI. If you're a bottom picker, this thing looks like it's making a bottom here at the low. So I think the risk reward is pretty good here on XBI, even though it's just been completely beaten up. If that's your style, I believe, risk reward's pretty good there now. It's above its 50. Anyway, that's enough for the drugs. I'm going to go to, well, that's it for me, except for one more thing, the home builders. I've got to get to the home builders because people are asking for actionable stocks, and I believe these ones are. Even though they made this big run up, you can see the cup with handle. It's the right side is really, powerful move, but you're gonna have to give it some time, allow it to pull back. But these ones are not, extended like some of the software names. DR Horton is another one. You can see the cup shape pattern, been up 4 weeks in a row. This is why, if we get a pullback, these are kind of some of the stocks that I am looking for. Lennar, it kind of looks the same, just consolidating in the base. If you go to the daily there, not bad. Anyway, that's it for me. There are actionable stocks. I have quite a few of them there at MC Stock Charts, and I'll be posting them this weekend and on Monday morning. And happy Thanksgiving. It's a shortened holiday shortened week, and like I say, the volume will be kind of light, I believe, and we never give up. Thank you for watching.